Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you tonight. The union government seeks the parliament nod to spend an additional 3.2 lakh crore rupees in the first supplementary demand for grants. With an additional 1 lakh crore rupees, fertilizer subsidy bill hits a record high of more than 2 lakh crore rupees. Stock markets end the day and the week with losses. The Sensex and the Nifty down 1% this week. IT stocks under pressure even as bank stocks buck the trend. HCL Tech shares slumped 7% in trade after the management indicates that its growth this fiscal could be at the lower end of the 13.5% to 14.5% band. A higher than anticipated furloughs in BFSI, high-tech and telecom verticals drove the downward revision.
And it's not like a golden, just for that golden hen, and, you just cut it out one day.
The 16 December deadline for receiving preliminary bids for IDBI bank privatization to be extended to January next year. DIPAM Secretary Tuhin Kanta Pandey tells CNBC-TV18 the government has already raised 62,000 crore rupees, including dividends of 34,000 crores.
It may not be necessary or may not be healthy for public sector to keep expanding the capital investment at the same pace.
CA Anantha Nageshwaran nudges the private sector to ramp up investments, asserts that corporate sector balance sheets are healthy and it is time to take bets, warns of rising cost of capital if the public sector keeps investing at the same pace. The proposed bill on SEZ reforms is unlikely to be tabled in the winter session of Parliament. Sources tell us that the bill is stuck due to differences between Finance and Commerce ministries. The Finance Ministry is not on board with tax incentives proposed under the new bill. Paytm shares rally as the company's board will meet next week to consider a buyback. The proposed move comes after the stock declines to a fourth of its IPO price, sparking a debate.
I don't think that it's the right thing to put India against China. I think what goes on in India and China could very well be operating in a separate world.
AstraZeneca's global chairman says that he's aware that India has the capability of manufacturing medicines and even vaccines for the world, but says it would not be fair to pit the nation against China. That's for newer ways of cooperation on innovation. U.S. monopoly regulator challenges Microsoft's proposed $69 billion acquisition of video game publisher Activision Blizzard in court, claims the acquisition can harm competition in the gaming industry. This is a major attempt by the Biden administration to curtail the power of big tech. Tamil Nadu braces for cyclone Mandos as it is now downgraded to a cyclonic storm. Heavy rains lash large parts of the state. Schools and colleges are closed across 27 districts. The cyclone is likely to make landfall near the Chennai coast after midnight. Well, let's start with the stock market action. Benchmark indices ended in the red following a volatile session. The Sensex slipped over 380 points today and the Nifty was down 113. The market also snapped a two-week winning streak with both the Sensex and the Nifty falling 1% each this week. IT stocks were a major drag on the index, so that's the market snapshot for you. But the big story coming in from Parliament, the war in Ukraine has burnt a big hole in the union government's pockets. The fertilizer subsidy for this financial year has crossed 2 lakh crore rupees, which is an all-time high. Remember, CNBC-TV18 has been reporting on the same. The Finance Ministry tabled a supplementary demand for grants before Parliament, seeking to spend an additional 3.2 lakh crore rupees. Sapna Das files this report on the breakup of the numbers.
Well, certainly it's a fertilizer subsidy which is now at a record high. The current financial outgo is likely to be around 2.14 lakh odd crore. The government has sought an additionality of over 1 lakh crore from the Parliament in the first supplementary demands for grants, against the budget estimate of around 1 lakh odd crore. Of course, this entire, subsidy bill has been extremely high, also mainly because of the Ukraine impact, the Ukraine war impact. Fertilizer prices globally have been on the rise and have been very high, especially the first half of the current financial year, and that is now reflected in a higher subsidy outgo. That's one. Second, of course, in terms of the food subsidy, 80,000 crores has been sought by the government in terms of additional expenditure from the Parliament. 60,000 crores within that is dedicated towards the PMGKAY, that tab is expected to be somewhere around 1.20 to 1.30 lakh crore in terms of the additionality on PMGKY in this year. So maybe around 50 to 60 odd thousand crores could be the rest of the amount that the government will be giving out at the time of the revised estimates of the budget. The third, of course, is the Pradhan Mantri Awas Yojana Rural, 28,000 crores additional over there, 22,000 crores for OMCs in terms of the LPG losses, again 16,000 crores over that sort for Manrega. So it's a big supplementary, so to speak, and the revenue expenditure is a major part of the outgo. But in terms of the overall fiscal impact, we are given to understand that this may not really impact the deficit in a major way because revenue is expected to be extremely buoyant in the current year.
Well, the government seeking Parliament's approval for additional spending. Now, the government will be extending the 16 December deadline to receive preliminary bids for the IDBI bank privatization to January. This on the request of potential suitors. The invitations of expressions of interest for Concord could also slip into January. DPAM Secretary Tuhin Kantapande told CNBC-TV18 that the government has already raised 62,000 crore rupees, including dividends of 34,000 crore rupees. Listen it.
Divestments are an ongoing thing, and as said that divestments are of two kinds. One is that we have minority stake sales in the market, some of the listed companies, and I think there we have a clear stance of be very mindful, like any prudent thing of doing a value-based divestments rather than just to chase a target. We know that we have got minority investors in mind. We know that those have investors. So therefore, it's not a question of just coming every other day and diluting whatever we have. And it's not like a golden just for that golden hen, and you just cut it out one day. We have got actually 62,000 crores of resources already raised this year.
Well, that is the DPAM Secretary. Now, the Chief Economic Advisor, Anantha Nageshwaran, has said that corporate sector's balance sheets are healthy and has nudged them to ramp up their capital expenditure. Nageshwaran also warned of the rising cost of capital if the public sector keeps investing at the same pace.
In the corporate sector are very healthy balance sheets, very healthy bottom line, and a financial system, both banking and non-banking, that is repaired, ready to lend, and the corporate sector is ready to borrow. We see that in the credit growth numbers today. So therefore, it may not be necessary or may not be healthy for public sector to keep expanding the capital investment at the same pace. Capital expenditure has to continue to increase, but not at the same pace, because we should not only be not crowding out the private sector, but also ensuring that the combined investment spending by the public and the private sector should not drive up the cost of capital too much for the economy.
Well, that is the Chief Economic Advisor. The new bill on SEZ reforms will not be tabled in the ongoing winter session of Parliament. We learned from sources the bill is stuck due to differences between the Finance and Commerce Ministries. Timsy Jaipuria is here with us. Timsy, it was expected to be tabled in the last session of Parliament. It didn't make its date. Even in the winter session of Parliament, there's no sign of the Desh bill being taken up. What exactly has gone wrong?
Well, as Nirmala Sitharaman in her budget speech had promised that a new Desh bill which will give a fillip to the SEZs that are there in the country, well, on that front, sources are indicating to us that the new SEZ bill or the Desh bill is stuck over differences between Commerce and Finance Ministries. Now the SEZ bill or the Desh bill is likely to miss even the winter session deadline to be cleared in the Parliament, because remember earlier it was slated to come up in the monsoon session, then it got delayed and it was decided that winter session could see the passage of Desh bill, and now what we are hearing from sources that even this deadline is likely to be missed, and net only because that Finance Ministry is not on board with the proposed tax reliefs that the Commerce Ministry is wanting it to extend, especially from the Revenue Department side, that is on the direct taxes. Revenue Department feels and believes that the concessional corporate tax regime which is there in the country is a sweetener enough, and Commerce Ministry should not ask for more. Rather, Commerce Ministry is even yet to respond to the reservations or the comments that were raised by the Finance Ministry once the bill was circulated for interministerial discussions, and that is where the bill is still stuck. Let's see how soon the bill gets cleared, especially from the interministerial consultations. Only then it can be tabled in the Parliament for a passage. It's something that we'll have to wait and watch for as to what could be the tax concessions, whether Commerce Ministry will have its way or the Revenue Department. That is something that we'll have to wait and watch for. Back to you.
Timsy, many thanks for joining us. Now, the Parliamentary Standing Committee on Finance has approved its report on the Competition Amendment Bill 2022. The new bill, which is expected to be tabled before Parliament in a few days, proposes to regulate mergers and acquisitions based on the value of transactions, among others. Jayant Sinha, the chairman of the Parliamentary Standing Committee of Finance and the BJP MP, said the bill provides more teeth to the competition regulator and businesses should feel reassured under the new law.
There are various provisions like the deal value threshold and so on that enable us to bring within the purview of the Competition Commission of India certain matters that can impact competition in India but could not be brought in a lawful way and now will be possible to be brought in. We've also strengthened the investigative powers and so on of the Competition Commission of India. And when you look at all of these different measures that have been undertaken, I think businesses, companies in India should feel very reassured and very encouraged that we have a world-leading competition law on our books.
Well, that's Jayant Sinha. Now, HCL Tech shares plunged 7% in trade today. This is the steepest intraday slide for the stock since January. This after the management clipped its FY23 growth guidance. The company's indicated that its growth this fiscal could be at the lower end of the 13.5% to 14.5% band that it previously guided for. Rima joins us with more on HCL Tech's downward guidance revision. Rima, what's led to this?
Thanks for that. So the street is spooked because just 2 months ago, HCL Tech had actually revised its guidance higher. So the question is, what changed in 2 months that the company has now got to guide down? Well, they said that we are seeing higher than anticipated furloughs in Q3 in 3 key verticals. One is BFSI, the second is high tech, and the third one is telecom. And these 3 verticals contribute nearly 50% of the industry revenue. So we've just quickly analyzed the revenue contribution of these 3 impacted verticals that HCL Tech has called out as of the revenue contribution to the other large cap as well as mid cap IT companies, and you would see it's roughly 45 to 50%. So for Infi, BFSI contributes about 30%, high tech is about 8%, while telecom is 12%. It totally adds up to 50%. For TCS, BFSI itself contributes close to about 32%, and for Wipro, BFSI contributes about 35%, and the balance 2 sectors, high tech and telecom, roughly adds up to about 10 to 15%. Even in the mid-cap space, these sectors have an extraordinary contribution, and these companies are highly dependent on clients in these 3 verticals. So emphasis LTI and Mindtree. Eventually, of course, LTI and Mindtree is going to be merged from here on, but right now, as of the September quarter, you would see that BFSI, high-tech, telecom and media, because that's how they club it, would roughly contribute about 60% to their overall revenues. So what HCL Tech has to caution has implications for the rest of the IT companies, and we're going to be watching very carefully what the companies have to say in the run-up to their Q3 numbers.
Yes, we will, Rima. Many thanks indeed. Now, shares of Paytm surging sharply. This after the company informed stock exchanges that its board will consider a share buyback proposal on the 13th of December. Now, remember, the current market price of Paytm is down to 1/4 of its IPO price. The company has also seen SoftBank, one of its investors, paring some of its stake after the lock-in period ended in November. The company is yet to decide on the price and the size of the buyback, but it could give an opportunity to shareholders to exit at a better price. Now, online marketplace Snapdeal has withdrawn its IPO papers. The company may reconsider an IPO in future, depending on its need for growth capital and, of course, the market conditions. It's decided to withdraw its IPO filing on the back of volatile market conditions. A new chapter in the ongoing saga between BharatPe and its former MD and co-founder Ashnir Grover. The Fintech unicorn has filed arbitration proceedings against Grover in order to claw back Grover's restricted shareholding and founder title. Sources say the company filed arbitration proceedings after Grover did not comply with the shareholders' agreement to transfer 1.4% of his holding in the company. BharatPe said no comment. Ashnir Grover was unavailable for comment. On to a CNBC-TV18 exclusive. Global pharma company AstraZeneca says it's delivered 3 billion COVID vaccines across the world. Speaking exclusively to me, the global chairman of AstraZeneca, Leif Johansson, stressed on the need to fund research in the pharma space and develop a much more sharper collaboration between academia, industry and government.
There is an opportunity to think differently at different unique times. We felt that this pandemic was unique enough to justify a not-for-profit decision, but also a very strong spreading of technology and technology transfer into many countries. It's also important to recognize that industry needs to be able to generate revenue to be able to fund research for future medicines.
Well, that's AstraZeneca's global chairman. FMCG major HUL recently announced its foray into the health and nutrition segment with the acquisition of D2C brands Oziva and Wellbeing Nutrition. But HUL is not the only big FMCG player to bet on the D2C space. Shilpa Radipeta is here with a deep dive into the recent acquisitions and investments by India's consumer conglomerates in the digital-first space.
Well, it's a D2C wave out there and all major companies want a ride. In the past 2 years, nearly every major consumer conglomerate in the country has either acquired or invested in a digital-first company, and this has been across sectors. Now, the most recent has been India's largest FMCG major, HUL, which invested in health and wellness brands Wellbeing Nutrition and Oziva. The Tata Group too has made several D2C bets in the past few years. Now, before it launched its super app Tata Neu, it picked up majority stakes in Big Basket, in fitness startup CultFit, and also e-pharmacy startup 1mg. Now, the group's FMCG arm also has bet on Nourishco in 2020 to expand its beverage presence. It forayed into the healthy food segment with Soulful in 2021, and it also brought 8 O'Clock, its coffee brand, as a D2C brand to India last year. Now, Reliance Industries too has made several D2C investments in the past 2 years under its retail arm. Now, Reliance Retail invested 200 million in Dunzo earlier this year. It also invested in Milk Basket last year, Urban Ladder before that, and even acquired 3 lingerie brands in the last 2 years. Now, Emami too has invested in a nutrition brand, True Native, and in pet care brand, 4Ball Story. It also holds a majority stake in a D2C brand called, which is in the men's grooming space, called the Man Company. Now, Marico is another FMCG major that wants to in fact build a strong digital-first portfolio. And to that effect, it acquired Beardo all the way back in 2017. And more recently, it picked up majority stakes in Ayurvedic brand Just Herbs in 2021 and in a healthy foods brand called True Elements in May earlier this year. Then there's ITC, which has picked up smaller stakes in 2 D2C brands. One is an Ayurvedic brand, Mother Sparsh, and another mother and baby care brand called Milo. Now, most of these companies, including the likes of Dabur and Nestle too, are also building their own D2C platforms. Well, they have realized that reaching consumers directly not only gives them better control over customer experience, but potentially also allows them to innovate and scale more efficiently.
Shilpa, many thanks for joining us. Time for us to head into a short break. But up next, U.S. monopoly regulator challenges Microsoft's proposed $69 billion acquisition of video game publisher Activision Blizzard in court. More when we return. U.S. monopoly regulator has challenged Microsoft's acquisition of video game publisher Activision. The Federal Trade Commission has claimed the acquisition can harm competition in the gaming industry. The $69 billion deal is the largest in the consumer tech industry since AOL acquired Time Warner for $180 billion. That was 2 decades ago. CNBC's Steve Kovac has the details on what is a major attempt by the Biden administration to curtail the power of big tech.
The FTC is suing to block the Activision deal, and the big reason? The suit lays out a history of Microsoft's gaming acquisitions and using those to put exclusive titles on its platform, such as its $7.5 billion acquisition of the game studio ZeniMax. The real issue here, it's Call of Duty, a multi-billion-dollar gaming franchise from Activision. Rivals like Sony have complained Microsoft will take it away from rivals too. But Microsoft has offered to put Call of Duty on rival rival platforms for 10 years and even said it's willing to make that enforceable by the courts. Now, Sony hasn't responded, but yesterday, Nintendo agreed to Microsoft's 10-year Call of Duty offer. Meanwhile, Activision CEO Bobby Kotick firing back at the FTC in a letter to employees, saying, quote, "We believe these arguments will win despite a regulatory environment focused on ideology and misconceptions about the tech industry." And Microsoft President Brad Smith making it clear the company is going to fight this in court, saying in a statement they tried to, quote, "give peace a chance," and offering concessions to the FTC. The big question now, what additional concessions could Microsoft float by the FTC besides the 10-year Call of Duty deal? It sounds like no more peace is on the horizon, though. Microsoft, guys, is ready for war.
Now, Indians have consumed 15% more alcohol in 2022 than last year. But while alcoholic beverage manufacturers are happy with the volumes, they say rising input costs and strict regulations are spoiling the party. Shilpa Ranipeta reports that companies are pushing state governments to loosen the leash, starting with greater pricing freedom.
Sales of alcohol beverages in India are soaring, but alcohol manufacturers are in poor spirits. That's because raw material prices have been steadily going up. Key raw materials like glass, ENA, barley and monocartons have seen prices rise between 12 to 47% over FY23. This puts margins under pressure even though sales volumes are higher because most state governments have not allowed companies to hike prices.
There are states where we haven't received a price increase for 5 years in a row. If all direct materials are in more than double-digit inflation, then the margins have come under a lot of pressure, which means I am unable to sustain the operations in a state.
Some states like Madhya Pradesh, Punjab, Uttar Pradesh and Maharashtra have allowed companies to hike prices in specific segments, but companies say this is not enough to offset inflation. More pricing freedom, they say, is vital.
Whilst we have got price increases in some of the states, but it's not all over and not across the portfolio. So there is clearly a lag, and we are hopeful that some of the other significant states like Telangana will give us a price increase.
One of the models being put across to the state is, why don't you look at an FMCG sector, right, which works and calibrates its prices basis the inflation it faces, and has the freedom to really charge a price to the consumer.
Companies also argue that more pricing freedom will benefit states as well, since alcohol contributes anywhere between 25 to 40% of revenues for most states. Different states levy different taxes and duties on making and selling alcohol beverages, which also vary depending on the type of beverage. This situation makes life tougher for some manufacturers than others.
There are still many others who are keeping the difference between taxes on beer and spirits quite unfairly high on beer, which is, of course, keeping the category quite muted versus its potential. The alcohol category is taxed by volume, not by alcohol. And so whether I have 4% ABV in a product or alcohol by volume, or another product has 48% alcohol, the tax rates are not different. So that puts more burden on beer manufacturers because their margins that way are not commensurate with the kind of cost that has gone in.
There are also different licensing requirements, restrictions on advertising, and strict rules governing retailing, including in some cases a ban on online sales and home delivery.
Alcohol policies in India are currently largely governed around the combination of wanting to maximize state revenues while also meeting the moral and social obligations of educating consumers on the adverse effects of alcohol consumption. But the industry is confident that a better balance can be struck and is hopeful that the ongoing discussions with state governments will allow for growth both in consumption and in profitability. In Mumbai, Shilpa Ranipeta.
While Steel Ministry has selected 67 applications under the PLI scheme for specialty steel, the scheme aims to attract investments worth more than 42,000 crore rupees, with capacity addition likely to rise up to 26 million tons. So applicants now being shortlisted by the Steel Ministry. And before we wrap, the Nita Mukesh Ambani Cultural Centre is all set for a grand debut, a first-of-its-kind landmark in the heart of Mumbai. The Cultural Centre will showcase the best of India's art and culture to the world and bring the world to India. The four-storied centre will contain 16,000 square feet of purpose-built exhibition space and 3 theatres. Here's Nita Ambani sharing her vision for the centre.
With immense joy and pride, I'm happy to present to you the realization of a lifelong dream, the Nita Mukesh Ambani Cultural Centre. The NMACC is an ode to our nation. I hope it can be a platform for Indian arts and culture.
And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues here on CNBC-TV18. Have a great weekend.